If you're looking to cash in on some of that equity you have in your current home and buy a bigger one, this is the perfect video for you. Hi, my name's Casey Gray. I'm a realtor, a mom, and I love helping families make the move up, which means cashing in on that equity that you have in your current home and buying a bigger one that fits your family's needs. So let's get into it. Today we're going to be talking about a HELOC, a home equity line of credit. This can be used in many different ways for many different things. It's previously been used for people to be able to buy additional properties, to buy their next home, and so many other things. You can take a HELOC out on your primary residence, your non-primary residence, and there's lots of different options and packages and products out there, is what they call them, products, that have different variations of what you might be looking for. So if you have a specific question about your situation, reach out to me and I would love to connect you with a lender that would be helpful for this process to you. But I'm gonna go down the rabbit hole and explain a few different options that you have when it comes to using a HELOC and how it might be able to help you unlock your next dream home. So what is a HELOC? A home equity line of credit. It's a revolving credit line and it can be done in several different ways. You could either have one draw period within several years, or you can have a repayment, and the repayment period can be anywhere from 10 to 20 years or less. So to be able to get a home equity line of credit, you need to first have equity in your home. So typically lenders will let you borrow up to 85% of your home's appraised value. So say your home appraises at $500,000, you have a $300,000 mortgage, that means your home equity line of credit could be up to $125,000. Your lender will still look at your credit, your income, your debt to income ratio. So if you have a large amount of debt in other areas, cars, credit cards, whatever that might be, that will also affect what your qualification levels are. They'll also look at your employment stability, how long you've been in your current job, if you've been in the same field for however many years. So they take all of that into effect when looking at the numbers that you might be able to qualify for. Home equity line of credits usually have variable interest rates, so it's important to keep that in mind and understand the numbers fully. If interest rates go up, your payment could also go up. So it's important to understand what you're borrowing. The home equity line of credit becomes a secondary lien to your first mortgage. So if you default on that, this could affect if you needed to sell your property, if you needed to refinance your property. There's different things that you need to be aware of when taking out a home equity line of credit. If you do decide to sell your home and have a home equity line of credit, you just need to make sure that the amount you're getting for your property can pay off that home equity line of credit and your first mortgage. A HELOC is better, in my opinion, than a bridge loan because it has more flexibility. You don't have to sell your home in a certain time frame. If you want to keep that home and use it as a rental, you can. But if you get the home equity line of credit while you're not yet in escrow on another property, as a primary home equity line of credit, which will give you lower interest rates, lower requirements if it's on your primary residence. The interest on the HELOC is only tax deductible if you plan to use the funds to improve the home that's securing the HELOC. So make sure to keep that in mind and make sure to talk to your CPA about that. Once you have your HELOC funds in your account, then you can use that to additionally qualify for a larger home, to put money down, to just have a nest egg in case if something goes wrong. So it's important to figure out what those numbers might look like. Talk to your lender about possibly purchasing a home later down the line to figure out what that might change as far as like qualification goes. If you're already at your max approval and you add on a home equity line of credit, you're gonna bring that approval amount a little bit further down. So there's a lot of things to keep in mind. If you want to explore this, the first step is to talk to a lender. I can connect you with several different lenders that can figure out what is the best product for you at this time. It's important to review the equity that you have to make sure that it's worthwhile for you to be able to pull that out from your house. And I think this is where people can either make or break a home equity line of credit. If you're taking a home equity line of credit out and going and buying depreciating assets, if you're gonna go hit the lake and buy some jet skis, there's things that you can do that can either, it can help you generate new wealth. So like if you're using the home equity line of credit, and then you're going to be able to put a renter in that house when you move out, and it will cover both your mortgage and your line of credit, you could do that. There's lots of different options, but it's important to, meet with a realtor, figure out what you're looking for, what kind of price range that's going to be, and how we can get you there financing wise. And you're going to want to figure out like what's your exit strategy. How are you going to pay this off? Are you going to keep some? Are you going to generate rental income from your property? Are you going to sell the house? If we're going to sell the house, how much can we sell it for? So it's important to figure out what your plan is going forward. And then of course, talking to a financial planner or a CPA is important to understand your tax implications, what you might need to know when it comes to using a HELOC to buy your second property or an income property or whatever it might be. So thank you so much for watching. I recently just had a client do this and it was a great experience. They were able to get a HELOC on their home, use the funds for some down payment fees, and also just keep a cushion in their bank account for the meantime. And they got a great interest rate on the HELOC and on their primary home. And this is a great option for those of you that have lots of equity in your home, but you also have a 2% interest rate and you're not quite ready to leave that. So if you're interested in exploring this, I have experience in this. I would love to help you. You can always download my free guide to moving up. It's called the gray guide, the not so black and white part of real estate, because there's lots of different ways that you can achieve this, and I would love to help you unlock your next dream home. So thanks for watching. Make sure to reach out to me if you're thinking about buying or selling this year, and visit my website down below to get my free guide to moving up or my free guide to unlocking Ukiah and all the things in it. So thanks for watching, and I'll see you in the next video.